Hey guys, welcome back to the second half of the weekend update. If you missed the first half, the link to that is in the pinned comment below. It was definitely a solid recap of last week, so check that out. But if you don't have enough time, if we're too close to market open and you're just here for the trading ranges, then you're definitely in the right place. So let's start with SPY. Tomorrow's implied move is between 534 and 546, and that is from options. And the 30-day average volatility is a little bit wider. It's between 531 and 550, and the implied move is about a 1% move. The 30-day average volatility 1.72%. And the implied move on Tuesday's contract is between 532 to 548. And tomorrow's trading range is not difficult at all, and this is across the board. We just got done with a really solid drop. We filled most of the gaps in the way, and right now we have a bit of support underneath in all of the indices. So then the first level to the upside to look for is going to be this 35 EMA. This is on the 30-minute time frame, and all week last week, as soon as we gapped down, this is SPY, and right off of that gap down, we were underneath the 35 EMA, and that was our resistance. So that is to the upside, and it is actually above the implied move here. And the same thing goes for when the 35 EMA is above the implied move as when it is below. We typically will see a flat day or an up day. Just like when the 35 EMA is underneath, we'll see a flat or a down day. So 35 EMA is above us tomorrow. And then if we get above that, then 546 is the top of the implied move. And then that takes us to the first real resistance, which is going to be this 1 hour 200 moving average. And the momentum here is flat. And above that, we have 548. That's the top of the implied move on Tuesday's contract. And then at the very top of the trading range, we have the 50-day moving average, and the momentum there is also flat. So even if we do see a bounce tomorrow, we have flat momentum at the top of the trading range, and we're probably not going to be blasting through that very quickly. Above that, we do have the 30-minute 200 moving average, and that did start to point down last week after a pretty solid squeeze that we had all of August. Underneath us, we do have the 4 hour 200 moving average, and that is just above the inflation gap from last week. So this is where we saw PCI and CPI last month. So we gapped up right before inflation data. So we gapped up that first day we had PCI, second day we had CPI, and we are looking at that level as where we have the bottom of the implied move. And what's funny is that we have CPI on Wednesday and PPI on Thursday. So right now, this level, this gap that we opened with inflation data last month is within range. So if we do have bad inflation data, we might find ourselves back in this gap. And if we don't, if we have positive inflation data, we might see that level as support. So 534 is the bottom of the implied move. The bottom of that up gap is at 533. And then the bottom of the implied move on Tuesday's contract is 532. And taking a quick look at Stupid Willie, we are definitely oversold here. And I didn't look to see what was underneath here. All right, so if we do break these levels, even in the next few days, then the next level underneath that, the next support, is the 1 week 35 EMA. So keep that in mind as we start the week, and if we do start to slip and you're looking further out in time, that 1 week 35 EMA, super important level, huge level in fact, is underneath us, and it's quite a bit away, but it is there, and it's the next level if we break this. And then SPX, the implied move over here is between, hold on, let me zoom in really quickly. So 53.50 is to the downside and 54.65. And then the 30-day average volatility is a little bit wider, 53.15 to 5,500. Tuesday's contract is 53.30 to 54.85. And then the first level to look for tomorrow is going to be that 35 EMA. super clear resistance all week last week, and it is outside of the implied move, which is going to likely pull us up in that direction. And right now we do have futures up almost 0.5%. So it looks like we may even open near that level. And if we get above it, 54.65 is the top of the implied move. We do have the 1 hour 200 moving average just underneath the top of the implied move on Tuesday's contract. And then above that, above the entire top of the trading range for tomorrow, we have the 50-day moving average. And the 50-day moving average was laying flat across the top of the consumer spending gap, and it did not slow us down. We did see a very small technical bounce here, took it back up to the 35 EMA, and then we lost it. And both the 1 hour 200 moving average and the 50-day moving average, the momentum is sideways here. So if we do find ourselves near the top here, don't expect a huge blast off. Momentum is not very strong at this level. And not to mention the 30-minute 200 moving average is pointing down. And then underneath us, we have the 4 hour 200 moving average and that up gap from last month's inflation data. This was PCI right here and CPI, and the day before we gapped up. Wednesday and Thursday, we have CPI and PPI. So if it doesn't meet expectations, we could find ourselves back at this level. And then if we do, then the next level underneath us is the 35 EMA on the weekly time frame. And in the first half of the video, I did zoom out to that weekly time frame. It's such a critical level. Do yourself a favor and just throw a 35 EMA on and take it on the weekly time frame, and you'll see what I mean. So that is SPX and QQQ. The implied move over here for tomorrow is between 442 and 455, and that is from options. The 30-day average volatility is 438 to 460. That seems pretty wide. That is a 2.28% 30-day average volatility. So we have VXN at 25, so expect some big moves. And the first level to look for, 35 EMA. Again, here it was resistance all week. We gapped down right here, and then that 35 EMA, we got that cross down right here underneath the 50-day moving average, and it was resistance all week. So it is above the implied move, which will signal either an up or a flat day, and with NQ up almost 0.7%, it looks like it's going to be an up day. So the implied move is 1.38%. So where futures are right now is 0.7%. So let's map that out. That's going to take us to about right here, 452. So 452 is right here. 35 EMA, still pretty high above it. That's going to be where we're drawn to. That 35 EMA is like a magnet. We always get pulled towards it. And then if we get above it, 455 is the top of the implied move. 458 is the top of the implied move on Tuesday's contract. And above all of that, we have the 1 hour 200 moving average pointing downwards and the 4 hour 200 moving average pointing upwards. So right here in the middle, definitely look to that as a possible level of resistance. That 1 hour 200 moving average is going to cause chaos until we turn it, and the 1 hour doesn't turn that quickly. Definitely not as quickly as the 30-minute. And then to the downside, we do have that weekly 35 EMA. I'll do it one more time. I'll take it out to that 5-year time frame right here. It is such an important level. 35 EMA is just underneath us. And just look at how critical this level is. This was the COVID bottom right here. And then when we got back above 35 EMA on the weekly time frame, it was a very steady support. We got near it, we bounced. We got near it, we bounced. We got near it, we bounced. And then when we lost that level, that was the top. After that, it turned into resistance and we would drop. And when we popped up, it pushed us back down. And then when we dropped and then came back up and it pushed us back down. So look, we are sitting right on top of that level. If we do start to trade lower here, and Stupid Willie on the weekly time frame has turned bearish, but if we print a red candle, then this 35 EMA absolutely is going to become resistance. And I'm just looking at this really quickly, and doesn't it look like we just completed a bull flag here? Let me take a look real quick. And yeah, we literally completed the bull flag. That's almost the most perfect bull flag in all of history. All right, so that is the 35 EMA on the weekly time frame. Let me get back to the 30-minute here, and let's look underneath what we have. So underneath that, we have this dashed line and this dotted line, and I have no idea what either one is. Okay, this is the 200-day moving average. That lines up perfectly with the bottom of the implied move. And then this dashed line, I'm going to zoom out just a little bit, but that looks like that may not need to be there. Yeah, let's get rid of that. It was a support right here, and then right here. Yeah, we don't need that level right here because we have the 200-day moving average just underneath it. So 200-day moving average to the downside, and just underneath that we have 440 is the bottom of the implied move on Tuesday's contract, and then underneath that we do have an up gap, and that is just off of that pullback from when we bounced off of where VIX was at 65, VX was at 45, and we bounced up and then we pulled back and then we gapped up. And this 200-day moving average was actually right here, and then this gap right here. Both of these levels are underneath us and could definitely offer a bit of support if we do drop. And QQQ's trading range is no joke. I would think that definitely have that 200-day moving average on your chart, 35 EMA just underneath us, and of course that 35 EMA right here. And that should get you through the day. All right, so IWM, the implied move over here is between 204 and 212, and the 30-day average volatility is 203 to 213, and then the implied move on Tuesday's contract lines up with the 30-day average volatility, which is 203 to 213, and to the upside we do have the 35 EMA. That is our first level of resistance. And remember, it is a magnet, so every time we trade too far away from it, we tend to get pulled back, and then at that point reassess whether it is support or resistance. Last week it was consistently resistance, so we drop, get pulled back up, resistance, drop, and then we did have that 4-hour 200 moving average, so we saw a little bounce at the end of the day. Now we're going to probably get pulled up to this 35 EMA. If we get above it, we do have 211, which is that really long level that we had from pretty much back to right after the COVID rally. So 211 is where we consolidated on for a year. And then once we broke underneath it, it became resistance. So 211 is right here and directly above us. So Friday we did get back underneath that level. And 212, top of the implied move. Then we have the 1-hour 200 moving average and the 30-minute above that. Both of those are pointing down, and the 50-day moving average pointing up. So we might get a bit of volatility if we get up here as traders on conflicting time frames battle. And then underneath us, the 4-hour 200 moving average and the remainder of that gap that we did not fill last week. And that goes back to that huge gap where we gapped up above the down gap, and that was such a huge gap, it just fueled the squeeze. So we have the rest of that gap underneath us. Bottom of that gap is at 206, bottom of the implied move is at 204, bottom of Tuesday's implied move is 203, and then we have the 35 EMA on the weekly time frame. And also the 200-day moving average is just underneath us. And then one more level, just because it is there, we do have this up gap right here, which is actually where we bounced on the 1 week 35 EMA after that massive drop. And just take a step back and look at this trading range. You can almost see a sidewaysness of momentum. That's not a word, but it should be. And we've got this down, this up, and this kind of flat. And then the 35 EMA coming down. And let's add in that 50-day moving average, because that momentum is still pretty strong here. So maybe 50-day moving average and 4-hour 200 moving average, maybe a bear flag at that level. After that big drop, some consolidation right here could be possible. All right, that is IWM and then DIA. The implied move for the week in DIA is between 396 and 413. And then the 30-day average volatility for tomorrow is between 398 and 411. And DI was trading the strongest for the past few weeks. And even though we did see a drop, it wasn't as big as tech or the S&P. And we did actually stay above this island top right here. So we had this down gap right here, this up gap right here, and we managed to close above it. So first level above us is the 35 EMA. This was where we saw that absolutely perfect resistance at the 35 EMA. And then we did see a bearish cross down right here. So that 30-minute 200 moving average should definitely be treated as a resistance until we get this 35 EMA back above the 30-minute 200 moving average. And then we did close right at the 1 hour 200 moving average, and underneath us the 50-day moving average. That would take us into that gap. Island gaps do tend to fill, so if we find ourselves in here in the next couple days, the two gaps are almost the same size, so this could definitely be a real battle in here. And then the bottom of the implied move on the week is at 396 with that 4 hour 200 moving average underneath it. So considering how oversold we are here, if we do find ourselves towards the bottom of the implied move, then I would say probably a bounce on that 4 hour time frame is very likely. And there you have it, guys. Let's see if we get some bounces after last week's drop. And if not, at least you know what levels to look for. And have fun tomorrow, trade safe, make sure you take profits when you're on the